Egypt's been on a desperate hunt for white smoke. Usually they're on top of the game in the Middle East and North Africa region, calling the shots politically and economically. Recently, it's been a whole different story. They're going through some major economic crises. On top of that, national savings, total and private investments are dropping so much that you can't see the end of it. The rocky economy of Egypt's been hit hard by a huge increase in external and internal debt, and it's not getting any better. Things have been going from bad to worse due to a series of crises like COVID, the Russia-Ukraine conflict, and increases in US interest rates causing a lot of money to leave the country. It's basically a big mess of financial problems for the economy, with a crazy deficit and a ton of debt weighing Egypt down. But for the most populous country in the Middle East and North Africa, it isn't a total disaster, as the government there says the crises hasn't totally wrecked the economy. Their numbers show that in the last year, GDP grew by 6.2%. Though the IMF is a little less optimistic, they're forecasting 4.8% growth for the year 2022 to 2023. While it's definitely a tough period, the government claims the damage hasn't been as bad economically as some might think. But other groups like the IMF have slightly reduced expectations compared to initial forecasts. The numbers don't tell the whole story about Egypt's economic problems. In 2020, Egypt was one of the few countries that avoided a recession because of the pandemic, but now it's become one of the places hit hardest by the war between Russia and Ukraine. As a country that imports more fuel and food than it exports and relies heavily on tourists from Eastern Europe, Egypt is feeling the effects of the conflict. Yeah, no surprise. How specifically has the war affected Egypt? Well, for food, Egypt gets 62% of its wheat from other countries and 82% of that comes from Russia and Ukraine, which makes it among the most negatively affected countries by the war in Ukraine. With a lot of that being cut off severely, they are currently facing a food crisis across the nation. The tourism sector's been hit hard as well, since tourists from Eastern Europe made up half of all the tourists to Egypt, about 8 million people in total, so a big number of that's been cut off. And with oil prices way up because of the invasion, Egypt's cost to import oil has more than doubled, especially since they import around 120 million barrels of crude oil each year. Inflation has increased a lot over the past year, which really hurts regular people and their wallets. Also, the value of the local currency keeps dropping sharply compared to other global currencies. This makes imported goods much more expensive. At the same time, the differences between what they export and import and between government revenue and spending have gotten much bigger, which threatens the economy. The reserves of foreign currencies and gold that they have access to keep shrinking too, while the burden of paying back public debts continues to rise, meaning more people are falling into poverty as a result of these challenges. Even businesses are struggling more to compete internationally. Specifically, inflation in August was 15.3% compared to just 6% during the same time last year. After devaluing the Egyptian pound by 50% in 2016, officials have been tightly controlling the value of the local currency. But since March, the Egyptian pound has lost about 20% of its value against other global currencies. One expert explained that Egypt needs a more flexible exchange rate system that allows for weaker currencies. This would help the country better handle external pressures and avoid building up trade imbalances in the future. Are we done with the factors leading to economic crises? Not yet. Poverty there is a huge issue. We can't just ignore it. Poverty is definitely increasing in Egypt beyond just the knock-on effects of a declining currency. Out of their total population of over 104 million people, around a third of Egyptians are living in poverty. This situation is made even worse because of the debt the country is facing. A lot of that debt was accumulated by borrowing money to fund unnecessary flashy projects and expensive arms imports. Egypt is now having to pay down their crazy $157.8 billion in foreign debt, with nearly half of all government revenue going just toward debt payment. On top of making the problem worse, Egypt also has a low tax to GDP ratio, which increases the cost of paying back debts denominating in foreign currencies because of how much the local currency is weakened. On the other side, Egypt's debt to GDP ratio has ballooned 3 times higher solely due to the depreciation of the Egyptian pound against other currencies. So many problems till now, but maybe they've got a strong private sector? Well, no. It's only getting smaller. The private sector there's really struggled in recent years. No wonder the current economic troubles are even worse. Surveys from the Purchasing Manager Index found that Egypt's non-oil and gas private industries have been shrinking for 63 of the last 72 months, which is long before the pandemic hit. Now is definitely not the time for Egypt to have a weak private sector. The population is growing like crazy right now, with it passing 100 million people in 2020. And since then, the population has been increasing by over 1 million people every 4 months on average. Can you believe that? The government knows that all these new people are really straining the economy. With so many new mouths to feed and people needing jobs, it's super important for the private businesses in Egypt to be healthy and expanding. Otherwise, it will be tough for the country to provide opportunities and support for such a large population. The government needs to focus on helping companies invest hire more workers, and produce the goods and services people need. The future is going to be grim otherwise unless they push this forward. Now, you must be wondering how things in Egypt differ from its neighbours. But before we go into it, if you like this video so far, please consider liking and subscribing to the channel. The pandemic crisis was handled way better than other emerging and advanced countries. The government really came through with their fiscal policy by allocating 100 billion Egyptian pounds to fight the pandemic and reduce how badly it affected people. They expanded welfare to help an extra 142,000 families and gave support to 3.6 million Egyptians. Irregular workers received monetary aid for 3 whole months, with tax exemptions going up too. And they increased health spending by 47%. Can you believe it? Plus, they raised education costs by nearly 15%. Talk about coming to the rescue. Not only that, but they set aside funds just in case the pandemic response needs to be enlarged. They took this crisis way more seriously than some other lockdown nations. The actions of the government really helped contain things much better than expected during the COVID-19 pandemic. Their disaster handling is evident when you see Egypt had 3.8% growth in 2020, ahead of the average of developed and emerging countries, where both groups recorded a contraction in GDP. Now, to understand the current factors that shape the way for all these bunches of crises, we should roll over in time. Back in the early 90s, Egypt was going through some major economic changes. The government started working with the World Bank and IMF to implement a reform program. They wanted to balance things out by opening up the market and letting private businesses have more freedom. One way they did this was by selling off some of the huge state-owned companies that had been around for ages. Then in 2004, the government kicked off another round of adjustments specifically aimed at shaking things up in different parts of the economy. These changes focused on stuff like making it simpler for companies to invest their money and trade with other countries. They loosened the rules around international trade and cut back on unnecessary red tape that had been piling up for years. This led to some solid growth in Egypt's GDP up to 2008. Everything was really starting to pick up steam as these reforms took effect across various industries. It's always a big shift when a country that's been more state-controlled starts empowering the free market and private businesses. Major reforms can stir things up initially, but if handled well, they have the potential to set a country up for sustainable prosperity. But the financial crisis, the Arab Spring in 2011, the COVID-19 pandemic, and the war in Ukraine turned the face of things. Looking at the big picture, it's clear that Egypt is facing some major economic challenges due to long-standing imbalances that have really been exacerbated by recent world events. The issues that the country is dealing with right now have shown just how much strain structural problems have been putting on the entire system. When you dig into it, you can see where things are out of whack, both internally and externally. Domestically, there are fiscal imbalances with how money flows in terms of taxes and spending that are just not properly balanced. Additionally, different parts of the economy like industries are not evenly supported. Monetary policies also failed to keep inflation in check over time. Externally, trade relationships like imports, exchange rates, and foreign investment across sectors are misaligned structurally. So while the situation has certainly been inflamed by outside forces, the underlying weaknesses stem from imbalances that have been brewing for a long time. Currently, Egypt is facing 3 main challenges. Firstly, the rapidly growing population. Between 2003 and 2028, it's predicted that Egypt's population will rise steadily by 11 million, or around 10%. The population is predicted to reach 116 million after growing for 10 years in a row, setting a new peak in 2028. Over the next 5 years, around 3.5 million young Egyptians are expected to enter the workforce. Absorbing all of these new workers will certainly pose challenges. But on the good side, this growth in the labour force also presents tremendous opportunities for Egypt if the private sector can step up. For decades now, Egypt's private businesses haven't been as dynamic or focused on exports as companies in similar countries. Only a small portion of firms have been able to compete outside the country. To really spur economic growth and development, the government knows it must do more to reform certain structures. They've started by working to improve how land is allocated for business use and are also looking to strengthen free market competition and transparency for government contracts. Reforming state-owned enterprises and tackling corruption issues are other priorities. If these reforms are successful, it could help Egyptian entrepreneurs and existing businesses significantly expand their operations over the coming years. With the right support and conditions, the private sector has the potential to employ millions of new workers entering the job market. That kind of job creation would surely lead to much faster economic growth nationwide. Of course, following through on meaningful reforms wouldn't be easy, but the potential rewards for Egypt make it well worth pursuing. Secondly, the modernization of the economy. Egypt is a huge country and located right next to important markets in other countries, so it really has a lot of potential to succeed economically. But in the past, how the economy was run held it back. The government used to focus too much on keeping things inside the country, and the way they were organized didn't help things either. Also, the state had way too big of a role in business. All of that meant resources got used in really inefficient ways. Now that the economy is more stable, Egypt's challenge is to modernize and take advantage of everything that it has going for it. A big part of that is making sure resources are used in the best ways to boost growth and cut down on stuff that stops markets from working like they should. If Egypt can do all of that, it will really help the economy perform at its full potential. Talking about this, it reminds me of a super important issue. Energy subsidies have really skewed prices there. They keep fuel costs way below what the market actually is, which only encourages wasting energy and overinvesting in industries that take big advantage of low fuel prices. Energy subsidies are super expensive and unfair too, usually benefiting people who are way richer and use way more energy. Pricing energy properly will help make the economy more efficient as it frees up money for health and education, really important for long-term economic growth and social progress. Egypt is starting to update its economy to make it more competitive with other countries, right? So the third point is, it's important they reduce how much debt the government has taken on so it can afford things long term. The national debt accounts for almost 90% of the GDP in recent years, but it's expected to decrease in the near future. Let's hope so. It'll be tricky to do this while also protecting lower income people. They'll have to be careful that as the country changes, the government still has money for importing things like healthcare and schools. It's about balancing becoming more modern, but not leaving people behind in the process. The government works to make spending and taxes more effective so they can keep focusing on important programs for poor people like healthcare and education. This inclusive growth strategy will gradually boost living standards over time, including for people just starting their careers. We can't end this video without talking about a super important issue for Egypt and the Middle Eastern region, and that is Egypt's relations with China and the US. In December 2022, President Abdel of Egypt and Xi Jinping of China met on the sidelines of the China-Arab Summit in Saudi Arabia. Both leaders made a commitment to strengthen bilateral relations and cooperation within the framework of China's Belt and Road Initiative, BRI. Egypt currently holds a key role within the BRI, which has a chance to boost relationships to new levels. The relationship between Egypt and China has grown significantly in recent years. China's grown to be one of Egypt's main trading partners and investors during the last 10 years. Chinese businesses have made billion-dollar investments in Egypt's power plants, industrial zones, and infrastructural projects, including the building of a new administrative capital. They've also signed a number of agreements to boost commerce and economic collaboration in the manufacturing, agricultural, and energy sectors. Now, you must be asking, why Egypt? Why would China prefer to cooperate with Egypt? Well, Egypt is a major entry point into Africa, located near the north side edge of the continent. The Suez Canal, which runs through Egypt, connects the Mediterranean Sea to the Red Sea and the Indian Ocean. With a massive population, Egypt offers a sizable market for Chinese goods. Chinese people don't joke over business. So far, so good. Here comes the doubt. Egypt's relationship with the US will also be impacted in a number of ways by China's alliance with Egypt. That's why if Egypt doesn't keep its connections with these two superpowers in check, there may be long-term problems. There is no easy solution for Egypt at this point. The situation is super tough. On one hand, they urgently need to fix their economy by reducing budget deficits, public debt, and ensuring enough foreign currency reserves. On the other hand, there has been a long-standing desire to improve people's lives, creating more employment opportunities, reducing poverty, and enhancing healthcare and education. You might think that these two goals don't really go hand in hand, that the things they have to do to decrease the deficit will automatically lead to job loss and hinder growth. But that's not the case. Well, some of the policies that can make Egypt's financial situation better can also enhance the living standards. So all we have to do is wait and see. Thanks for watching till the end. If you enjoyed this video, make sure to hit the like and subscribe buttons to receive more content. See you in the next video.